Okay, it's a little bit getting almost to the end of the day here, dark. I'm looking at my porch out here. Beautiful December day. You can go swimming here all year round, but wanted to talk to you today about something that comes up a lot from people. And this is, where is the real estate market at this point in St. Kitts? All right, I'm going to give you a little bit of history on this so you can kind of understand if you're looking for a property, not just in St. Kitts, but if you're looking for it in Panama, Mexico. In fact, I was just talking to a client yesterday that lives in Mexico, and I wanted to go over some things with you on how you can really tell where real estate is, and are you buying at a good price and so forth. Now, typically when you ask a person when is the best time to buy, when the market's high or when it's low, they're always going to tell you when it's low. But the fact is, that's not when they invest. Usually people like to go in when the market's going through the roof, okay? When you've had a history of looking at prices where they've dropped, they drop. It's very difficult for people to really jump in. They think, well, is it going to drop further where I can get it even cheaper? This is the key. And what that does is it ends up keeping people from ever investing. And that's why a lot of people end up really messing up and never really getting good deals. And this is what you have to look at. When you're buying cryptocurrencies, it's totally different. You can't look at valuations because there is no valuation. There is nothing that's in there other than the speculation someone's going to pay more than what you pay. So if you look at a cryptocurrency and it's dropped, you really can't look at drops and try to dollar cost with cryptocurrency. The key is it going to be selling for more later? Even if it's going up 10 times, it doesn't make any difference. Is someone going to pay more for that than what you paid for it? When you're buying real estate, it's totally different. You're buying equities like stocks, it's totally different. Okay, you look at valuations. What's the price earnings ratio of it? Okay, and these are some things that you have to look at. Now, I'm going to tell you some things. I was actually in the investment business. I had my Series 663 and 26 in the U.S. I had my modules 5, 8, and 9 certifications as far as the passing the test in Singapore. So I've had a history. I did it for probably close to 25 years. And I studied not just in that, but also in real estate too, because they both go hand in hand. And usually what you'll find out is equities go up first in a certain market, and then real estate follows. Okay, it's just the equities move up. They can move up on a dime, like the next day. Real estate takes a while for that to happen. Okay, let me give you an example of what I'm talking about. The dollar, when it started plummeting right around the year 2000, 1999, what happened was when the dollar took that big plunge, it took a while for properties in emerging markets to really start to take off. In fact, it actually took about 3 years before it really started to jump on the bandwagon in the real estate part. But the real estate also lingered longer than when the equity market dropped in emerging markets. Remember, the equity market in emerging markets started to drop the latter part of 2007, and it bottomed out around March 2009. Okay, so what happened was real estate market in St. Kitts continued to go up. Actually, I think it finally peaked out around 2010 or 11, right in there. Okay, now if you look at emerging markets and what has happened, this is important. This is the reason I'm doing this video, that you need to understand. Okay, if you look, pulled up a chart yesterday just to look to see what the Seng index did. Now, Seng is tied up with a lot of Chinese stocks. China is still considered an emerging market country, although it's very developed. It's still under an emerging market country. Okay, and St. Kitts is an emerging market country. So is Mexico, and so is Panama. Now, these are areas that typically go up a lot when the dollar plummets. Okay, and we haven't seen that since about 2009. Okay, so and usually these bull market runs in the dollar, they usually run about 11 years, and we're way beyond that point now. Okay, so now when is the next fall going to be with the dollar? I can't tell you, but usually you'll see signals when commodities start taking off. Okay, and we've had a huge inflation jump for the last year and a half. I mean, the biggest I can remember in my lifetime, and I'm 68. I don't remember any time period in my lifetime. They said, back in, it was 40, I think it was 41 years ago it happened. I don't remember inflation going up like it has recently. I mean, I've seen dark chocolate that I like. I've seen these bars double in price. I mean, it's just incredible how much they've gone up. And just printer cartridges down here have more than doubled. It's just incredible how much they've gone up in the last year. Now, that being said, typically what happens is these markets start to take off. Usually, and the dollar usually starts to take a fall. Usually when these commodities start their trend going up, okay? And I think what you're going to see is you're going to see a lot of emerging market real estate start to take its turn up like it did 2000 to around 2009, right in there, 2010, okay? Now, right now is a real inexpensive time, because usually what happens is, as far as buying real estate, but I pulled up this chart just to give you an example, and try to get these figures in your mind, because if you'll do this, it will educate you on these questions that people ask me all the time, and that is, where are we at in this cycle? Well, I pulled up the Seng index just to give you an example, and we had a huge run-up that ended around November 2000, and actually the Seng index is like, right now it's 22% below its peak from 2007. November the 2nd was that peak, okay? Now it did hit another peak, which was January the 19th, 2018, okay? Now we're actually 27% below that peak right now. Okay, that's the Seng index. We're actually 22% below the peak it hit back in November 2007. Can you imagine 22% below what it was about? We're looking at, that's 14 years. 14 years. We're not even. We're like 22% lower than that point. Okay, now that means that the Seng index has been battered compared to the S&P 500 index. Now this tells me how much not only is emerging market equities are underpriced, but also real estate emerging market countries too, because they run in tandem. Remember, I mentioned that to you, okay? And real estate, now I will say this, real estate here is definitely higher than it was back in 2007. But you haven't had the run-up like you have had in Canada and the U.S. in properties. All right, but that's getting ready to change dramatically. Okay, and remember too, this is a tax haven. Tax havens usually really take off because there's no income tax, no capital gains tax, no estate tax, no inheritance tax, and almost a property tax that's close to zero, and that draws a lot of wealthy people. Now, let's look at, and one thing I want to tell you too, by the way, too, the Seng index, which is in Hong Kong, and it has a lot of Chinese stocks in that index. Over the last 50 years, and I ran it actually from 1969 to 2019, because the Seng index actually started back in 1969. It's actually outperformed the S&P 500 index over that time period. That's phenomenal. Even with the huge downturn that we've had, even with the Seng down 22% below its 2007 high, it still is outperformed the S&P 500 index. Okay, and that's of course the U.S. index of your biggest 500 companies. Now, let's look at what's going to happen in the future. All right, now I checked the S&P 500 index, and it was 4668.97 yesterday. Back in 2007, in September 21st, it was 1525.75. So to give you an example, it's over 3 times higher in 2007. That's in September 2007 than it is today. 3 times higher. The Seng index is actually 22% lower. Not only is it not made money, it's down 22% over that time period. Now that doesn't include dividends. I'm just taking the actual market and what it's done. That's with dividends paid out. So but I'm also doing that with S&P 500 index. So we're doing an apples for apples comparison without dividends. Now, the reason I'm bringing this out to you, which index looks like it's undervalued? I mean, it's no question the Hang Seng index is tremendously undervalued compared to the S&P 500 index. There's no question. I mean, anybody that looks at that index can look and see that. The problem is most people would look at that and drool and say, boy, this looks like a deal. But most people are not going in emerging market equities, and they're not going in emerging market real estate, because it's like they say they want to buy low and sell high, but when they look at the chart, they go, ooh, man, that looks bad. Actually, that's good, okay? But the problem is most people say different than what they do. And right now is the best time to buy, I think, in years and years, in places like Panama, St. Kitts. I think St. Kitts is even better than Panama, because Panama is not really a pure tax haven. Yeah, it does have a territorial tax system, but also St. Kitts has got a lot more wealthier people per capita than Panama does, and it's English speaking too, and that draws a lot of wealthy people. Just the fact that it's English speaking and Panama is not. And Mexico's the same way. You know, Mexico has, as far as wealthy, they do have a lot of wealthy people there, but per capita it's a poor country compared to St. Kitts. And it's not an English-speaking country. I'll tell you this, folks, long-term, I think you'll do better if you stick with English-speaking countries and then try to buy at bargain prices, because you got a lot more people that can come from different places of the world that speak English, and it just attracts a lot of people otherwise. But we're looking at a market here that's tied to the emerging market index. And that index is so incredibly cheap. I don't remember it being this cheap ever in my lifetime. And right now is a great time to be actually going in either real estate, emerging market like St. Kitts, or even the equities themselves. Now, we don't deal with equities, so I'm not going to recommend that to you. Used to be in that business. I don't do that anymore. I'm not a registered financial advisor. My expertise is in the real estate market. It's also expert in that, but I'm not licensed to do that, so I don't give people advice on that. I just tell you what I've examined on charts. You have to go and make your own decisions on that. If you want your expert advice on the real estate, I can give you that. Be glad to do that for you. But anyway, these are things that you need to look for. If you're looking for depressed markets, this is how you go about looking at it. You look at charts, you go back, you make comparisons with other markets that have gone through the roof, like the S&P 500 index. And if you look at that S&P 500 index, man, that thing is going straight up, and it's not a good time to be going in right now. The price earnings on those equities are way too high, one of the highest that I've seen in a long, long time. Man, you can, in emerging markets now, the price earnings is so cheap and inexpensive, it just blows your mind when you look at it. It's no comparison. China's like around, the last time I checked, was around half the price earnings ratio, the whole market as a whole, less than half. And remember this too, is when the dollar drops, you only have the equities moving up, but you also have the currency move, where you can see something go up. You can see equities or real estate go up double or triple, not just because of the valuation of the actual asset, but also of the currency of the U.S. dollar dropping. This is where you see huge run-ups in investments. If you understand currencies and you also understand equities and price earnings ratios. Anyway, folks, if you got questions or comments, just go on our website, www.citizenshipquickly.com. Hit the top bar that says apply with us, fill out the questions. Hit that bottom bar that says send it to us. We deal with over 100 citizenship by investment, residency by investment countries all over the world. And don't forget to hit that subscribe button on the right of your screen and that notification bell next to it. And also, folks, if you got a question or comment, just put it below, and I'll be glad to get back with you. And I look forward to talking to you on the next video. Take care.